Hello, YouTube. Hope you all had fun celebrating 250 years of United States over the weekend. We are entering into a full trading week, and I'm excited to get things started on Monday morning. I'm going to be sharing 320 stocks that are AI data center plays that you would love to have under your radar. Yeah, this might be a good time to start considering buying them. You might also want to wait for a dip in those stocks as things unfold. So the first stock I'm going to talk about is Nokia. So Nokia contributes to the AI ecosystem by building the network infrastructure that AI depends on. So Nokia is coming from the networking component and is gradually carving a niche for itself. In those days, Nokia was known for mobile devices, but Nokia has evolved into a network AI infrastructure play, especially for AI workloads that grow and shift toward the network edge. So it's coming from the network connectivity standpoint. Nokia is heavily investing in AI, RAN, autonomous networks, high capacity optical and IP routing systems. It's enabling telecom operators to run AI virtualized radio access networks on shared infrastructure. Recently, Nokia partnered with SoftBank, partnered with NVIDIA. So it allows carriers to execute external AI workloads directly on network hardware. So they already had a network hardware infrastructure. They're just leveraging that infrastructure to get involved in the AI data center play. Earlier in the year, Nokia booked 1 billion euros in AI and cloud orders. So that is a potential future growth with respect to that. So, I mean, the last 6 months, it has run 85%. In the last 1 month, it's dipped year to date 86%. So it started the year around $6 thereabout, and it doubled. Yeah, it was $16. So imagine if you had 100 shares in January of this year, you'll be smiling to the bank right now. If you have 1,000 shares in January, imagine how much you would have made by now. So, stocks investing is about compounding assets over time. All right. So that is Nokia. So so for me, if I'm going to go all in into Nokia, yes, I'm going to be looking for these sections here. So anything around there. So this should be $13. So yeah. So it went further down. Let's see the last 6 months. So $9. Yeah, so $9 might be a good entry point, but like I always say, you don't have to wait until it drops to $9. You can initiate a position here right now. At this current point, you can initiate a position and continue to wait. All right, continue to wait for, yeah, at this point. So that's $12. And this is like $16. So yeah, $12, 12. Yeah. So you might initiate a position at this level. All right. Just buy a couple of shares and then hopefully it drops. Sometimes these AI stocks, you will think that they're going to drop, then they just keep running. So if you are lucky and it drops to $9, that might be a good point to load up more on it. All right, so that's Nokia. So I'm using Google Finance to uh, run this analysis. The next stock I'm going to talk about is Big Bear AI. Now, Big BAI is a bit speculative. So Big BAI is a bit speculative. Yeah, you might just want to keep this on your radar, but it has potential to run because Big AI contributes to the AI ecosystem by delivering decision intelligence platforms for defense. So it's partnering with government, DoD, national security, critical infrastructure. So its tools help government and enterprise clients to analyze complex data, predict outcomes, and optimize operations. So they are not most analysts are not really paying attention to Big AI right now because it's running at a if you look at the market cap, average volume, no PE ratio, no dividend. So it's been hovering around $3.50 to $3.07 for a while. Yeah, so maybe it's not profitable as analysts would want it to be. So that might be a reason why it's not getting that popularity that one will expect. But this has a growth future, so you might want to keep this on your radar. And if you have some change, you can initiate a buy here. So this is a long-term trade. So one day we'll pick up. So that's why I said it's speculative. So based on momentum, it might just shoot up one of those days based on momentum, based on one headline on the news, Wall Street headline. It might trigger a spike in the stock. So in the last 6 months, it's gone down 39%. In the last 1 year, it peaked at $7.70, and then it went all the way down. Yeah, so it's run at a loss. So they're not making money like Palantir, right? So like Palantir and all those other related stocks that are performing similar tasks. They're also big on big data analytics, but they are largely government contracting. So let's see how it runs in another 1 year. Let me see in the last 5 years. Yeah. So it's been on a downtrend, that's hovering around all of these ranges. Yeah, so it's a speculative stock. So don't put your money there, or if you have some passive income you want to put there for a long term, yeah, just keep it on your radar. Put it on a watch list. You don't necessarily have to put money. Put it on a watch list. Continue to track, follow news around it, and hopefully something might trigger interest among the wider range of investors. The next stock I'm going to talk about is BlackBerry. BlackBerry. Who remembers BlackBerry? So BlackBerry is known for mobile devices as well. One of the early smartphone producers in those days. But in the AI play, BlackBerry contributes to the AI ecosystem through AI-driven cybersecurity and embedded operating systems. It supports safety critical environment. So it's using a QNX operating system. It powers over 275 million vehicles. It forms a secure foundation for automotive, AI, robotics, industrial control systems. So BlackBerry's shift from smartphones to infrastructure is premised upon the fact that it's now providing security, it's providing reliability, it's providing real-time operating system capabilities for intelligent machines. So from analyst standpoint, so the analysts are saying that, this is a AI security play, especially for emerging smart vehicle, industrial AI systems. So, and in the last 6 months, BlackBerry has run. So this is $3. So it's the same situation. Well, maybe not the same situation, but BBAI. right? BBAI was, so this is $3.53, right? So imagine BBAI. Now compare that to BlackBerry. So from January till like April, early week days of April, was trading $3.55, and all of a sudden it started running and running and running until it got to $12. Right, so these are stocks you want to keep on your radar. Yeah, it's run a lot, 203% growth in the last 6 months, out of the last 1 year. Yeah, so the last 1 year, over 100% growth. In the last 6 months, 200% growth. So it's run a lot. So you might want to wait for it to cool off. So $12. So anything around $8.38, right? That might be a good entry point. Yeah, anything around $8.38 might be a good entry point. Or if you are optimistic, if you are ready to do a long-term investment on it, you can wait for another pullback at $6 thereabouts. All right. So once again, these are AI data center plays. This is from the security standpoint. So you might think that they will go that low. They might pull back that low so that they can come in. You may not get those opportunities again, but just keep an eye on it. You can as well initiate a buy just to tie a position, and then if it reaches your desired zone, you can add more money, or you can just keep it on the watch list. And then once it gets to a point where you love to invest, then you can do that. It has a P ratio of 114.73. So you don't want to. This is not a stock you want to keep for a long term because of the PE ratio. Yeah. So this, you don't want to keep it as a long-term trade. It is breeze in and breeze out, sniper mode. So you don't want to keep this because of the PE ratio. It's so high. So for stocks that you want to keep for a long term, you want to pay attention to the PE ratio of those stocks. Make sure they are very low compared to what you have here. All right. So I have an extra. Call it Jara. Type Jara in the chat. JARA. So I have a Jara for you today, and that extra is going to be SoftBank. SoftBank. Got it in the US. Yes. So SoftBank was one of the. I knew it has some growth potential. In the past year, SoftBank was. Let's go back to 5 years. So last year, SoftBank was trading around $7, $5, and then it started going up. All right. Then down to $10. So it was around $23 in May. So it cooled. So look at this. Look at resistance. So there was a resistance here. Let's see what that is. So $19, $20, yeah. So there was there's like points you want to pay attention to. And then it went further down to $17. Yeah. So you're looking at those resistance levels. These are resistance levels. So what is a good entry point for SoftBank? This is a good entry point. I mean, it dropped from $23 to $18. So let's check the last 1 month. Yeah. So it's dropped almost 20% in the last 1 month. So if you want to consider SoftBank, you might just go ahead. So what was so special about SoftBank? SoftBank contributes to the AI ecosystem by acting as a major investor. It's a company based in Japan, right? But they are investing heavily in AI solutions in the United States. So SoftBank collaborates with Nokia on AI, RAN. It enables telecom networks to run both AI and virtualized RAN workloads. So SoftBank is providing the capital investments for AI. So we're partnering with OpenAI, partner with Oracle. If you're following the news, SoftBank is also advancing 6G research. So it's using AI to improve spectral efficiency, network flexibility. It's a major investor in the AI scope, AI data center scope. All right. So it has a massive scale OpenAI exposure. It has an entire AI stack, investing chips, data centers, frontier models, robotics. Yeah. So maybe quantum computing might be on the horizon for them as well. So it has potential upside as the AI growth is picking up. And I was looking at a story on YouTube of the CEO, of the chairman of SoftBank. Was like, AI is here to stay. You're going to be going to robotics, that from agents, right? From agents to robotics. That's the progression, and he's very bullish on it. So SoftBank had a $30 billion investment, right, early in the year. So it's just investing in all potential avenues for growth. So if you're interested in SoftBank, so these are like under 20 stocks. So I just thought I should post that out there so that you can keep them on your radar. And you don't want to jump in. Don't chase the trend. Wait for pullbacks so you can get a better entry level. All right, so that's it from me. I'm going to see you on the next one. All right, enjoy your week. Take care.